Go ahead. Make my day.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Weiland. I am the Rebel Broker, licensed real estate broker in the state of California. Member, National Association of Realtors. But please, don't hold that against me. Welcome to Friday, everyone. We need to talk. We're getting a lot of very interesting news items poking around about the market. Granted, it mostly is going on about the California real estate market, but that's fine. I mean, California is one of those markets where as soon as you start seeing things going nuts there, you can pretty much count on things going to nuts to some degree or another in other big markets. So we're going to cover some of the big news items here and see exactly where that leaves us. And then we're going to lay a heaping helping of ground truth into it. I'm going to give you the stats for all of, which is really the county. Folks who live in other counties will disagree. But if you live in Santa Clara County, that's pretty much Silicon Valley, right? You can argue that, well, maybe San Mateo County would also kind of get in there. And some people argue go as far north as Marin and you're still in Silicon Valley. But if you want to talk about where all the big names are, you know, Apple and Google and all these guys, Santa Clara County's it. So that's kind of the epicenter of the lunacy. It's where cities like San Jose, Sunnyvale, Santa Clara, Mountain View, Los Gatos, Morgan Hill, where I am, you know, so all the Palo Alto, all the cities that are famous for you are ones that are in Santa Clara County. And so what brings this on? Why do we feel like we need to have this conversation? Again, it's to combat the headline trend, right? Where people read the headline and move on with their day, assuming what's implied by the headline is what's really happening. And as we've discovered on this show over the last, good Lord, 11 plus years that we've been doing this, it rarely gives you the information you really need. And if you're trying to form smart decisions based on good conclusions, which implies good data, then you need to dig a little bit deeper. And you know, I like to think that over the years, for those of you who've been listening to me, you know what keywords to look for in a headline, and we'll spot those today and we'll chat about them a little bit. However, this is also one of those rare situations where while the headline itself is not reflecting reality in terms of what it seems to be wanting to tell you, I think that what we are seeing still indicates a strong idea that we are in a pivot in the marketplace, which almost seems like what they're trying to get you to believe. So maybe even just reading the headline could make you make the right actions for the wrong reasons, right? But we'll get into that. We'll talk about it. But first, let's hit a few of the headlines that I've been seeing over the last week. Now, first, this might have been smarter to put as the cherry on the top instead of as the first run at this. But the first headline that hit me was consumer sentiment slumps to 6-month lows as economy soars. And that's an interesting one. And I guess suppose it's an interesting claim to make. It's from our good folks over at, who the heck? This is one of those places I look out for because they are a little nutty. Zero Hedge. Are they correct? They're absolutely correct. But the decline is not really statistically significant enough. It's a 0.3 decline from, what did they have? 98.2 down to 97.9, which is the overall general sentiment. And I believe these numbers come from the University of Michigan Consumer Sentiment Index. So there's that. And if it continues to be a trend, we'll see. But it's actually, if you look at it over the longer term, going back farther than months, right? They only give you back to December on the chart they choose to give you. And the reason for that is because they only want you to look at a shorter term. It's not actually at 6-month lows in terms of the current economic conditions index. It's, if you go back to December, we're sort of close to the same point, but it's actually on an overall high. We just came off of a peak in March. So in general, things are not bad in terms of general consumer sentiment. And remember, a lot of the things we talk about and a whole lot of what we bank on as investors comes down to not what the statistics say, but what people believe. right? So many things that occur because things believe X, Y, and Z are bad. So they take actions as if that is true, even if it is not. And through taking those actions can bring about the bad thing that they were worried about, right? It's been a while since we've had this conversation, but way back when the downturn was really hitting us and we were talking about actions that made things worse, right? Because people had seen bad thing A happen, they take action B. Well, action B actually feeds the beast for A, right? So, and when you get into a cycle like that, which we really used here a lot to help guide people make their investments, you find some ridiculously awesome deals. And we did back in those days. In 2009, 2010, 2011, we were calling it in terms of the psychology of what made people believe what they believe and then what their actions make happen based on those beliefs. Now, the reason I bring that up is because one of the things that keys you into that is a general lack of confidence on the part of the public in different things, right? And it's also neat to look at some of these studies that they do to find and then drill down into the specifics, right? They create a general feeling number, but what I like to see is the specific questions, right? How those numbers change. How do you feel about your income prospects over the next year? How do you feel about housing? How do you feel like you might want to buy a home or sell a home in the next year? Those are the kinds of questions that are good for us, not ones that we get exposed in this particular survey, but really don't need it because overall the general number doesn't tell us anything that I would say you should take action over. But in the future, as you see these things, drill down to those sorts of cases and see if we aren't seeing a trend. Now, we looked at these numbers from another provider about 5 months ago, and it was showing an interesting downward trend in perception, but then that completely reversed, right? And we're now starting to see, and this is something else that's coming out in headlines, is that the baby boomers, and we talked about this in one of last week's shows, are looking like they're going to step up and start selling their homes. Not really sure. To be honest, I think that is a thing that will happen. I'm just not sure it's happening now. And I can't help but wonder if some of this is wishful thinking on the part of some folks, because I sure am not seeing it in terms of the listing layout I'm seeing, at least in my market. Okay. Now, the next headline comes to us from CNBC, and I think it illustrates perfectly something we've talked about a lot on this show in terms of the gap between the supply of properties and the demand of properties, and how much can we move in between those two things so that even when negative, quote unquote, negative things happen in the marketplace, we're still seeing ridiculous prices. So here's the headline from CNBC. San Francisco Bay Area June home sales fall to the lowest point in 4 years as prices surge to record levels. Now, that's actually a fairly honest headline, right? Because it does represent two facts. One, the volume of home sales has fallen, but the prices have ripped straight up. They've continued to go up. Now, this article gives us 3 basic bullet points. First, June sales of both newly built and existing homes in the Bay Area dropped a little bit more than 9% compared with a year ago, and that's according to CoreLogic. What's interesting here is new homes, right? Existing homes have always been a problem. We just don't have enough of them coming on the market. But what we're seeing, and I think one reason why we're seeing this, and I think this will become clear as we go, and I think it just makes sense from a common sense standpoint. Next, the median price of a Bay Area home sold in June hit $875,000, up 12.9% compared with June of 2017. So just to clarify, that's a 13% increase in sales prices in 12 months. And that is the highest price on record. Next, Bay Area home sales fell annually in all counties except San Francisco. Okay, so what does that tell us? Right? It's not contradictory. We've talked about this before. It simply means that the volume of homes, the inventory of homes, is the problem. Right? If you're seeing the number of sales decreasing, it's not because people didn't want to step up and spend their money, because the price is increasing. It means that we simply don't have enough homes out there. Now, what's interesting is a huge chunk of these properties that are not selling are new construction homes. And the reason I believe that's happening is because, as we've been talking about now for, I think we're going on year 3, they've only been building or predominantly been building at the higher luxury end, and there's simply price fatigue at that end of the market. Now, I've mentioned price banding before, and that is where, and it's not a universal number. In other words, I can't tell you a number, and that number, that price represents a price band point in your market. This is something you have to figure out for yourself. For those of you who've been listening for a while, you know that I usually have a number that I call the price wall, and that is the price at which suddenly everything changes. Meaning, anything priced, say, under $900,000 in Morgan Hill is going to sell super fast. It's going to sell. The last one I had on under 900,000 sold in 4 days. It could have sold in 0 days if I wanted to, and I actually had to push to wait for 4 days to get other people into the mix. And that was a home that had challenges. This was not a stellar, awesome, everything's ready for you to move in. This was a home that needed a little work in the kitchen. It needed a little work. There was a lot of little things that needed to be done around the home. This was something that had a lot of fixer elements to it. So not an exemplary example of homes in that price point. It sold in 4 days, and it sold for a record in terms of price per square foot. So, and that was just a few months ago. So that's that, right? Now, take a home that has more amenities, that is bigger, that gets priced beyond a certain point, and suddenly you're seeing weeks and weeks and weeks on the market. There's one literally 2 doors down from me that has now been on the market for 2 months and should not have been on the market for 2 months. We can have a lot of conversations about why I think that home hasn't sold yet, but the bottom line is there is a point at which, and you can argue that it's simply the supply and demand argument. Again, it could be that there simply are not people at that price point, enough of them to fill that and get people in here to buy. And it could, and that wasn't the case a little while ago. The homes that were at the same price were going relatively quickly. But I think that there's a certain level of fatigue at a certain price point. And in my market, in my specific example of the house right next door, that's not the case. I've been keeping an eye on my market for quite a while, and that fatigue wall, that wall of pricing in my local market has been at about $1.1 million. If you price over $1.1 million, all the stats change completely. Suddenly you're on the market longer. It takes longer to get it sold. The odds of you having to drop your price go up. The odds of you having to accept an offer below your list price go up. All of those things change, and that's what I refer to as a price wall. So something you can calculate in your marketplace just by looking at the data. You can simply plot, have it be price and then have it be days on market on the other axis, and look and see how long. And you're going to see interesting places where that happens, where that banding occurs. And then you'll be able to get an idea of, well, heck, once things get beyond this price in my market, and maybe that price is $600,000 in your market, then suddenly things drop. Now, why do I even bring that up in this context? I realize it's a little bit off because we're trying to talk about what news is taking us in what direction right now. But the reason why I bring it up is, as an investor, this is a key number for you to know. You need to know where you're going to get the highest return, particularly if you're someone who is a buy and flip person. If you are going to buy and you're going to flip, you want to know that you're not right at this point where you would be priced on the other side of that price wall, right? You don't want to be there. You want to be in a home where you can acquire it and sell it at a profit that will make you happy, that will all occur below that price wall. Does that make sense? And what's also bizarre is in some markets, you'll find a price wall that is self-contained somewhere in the middle. In other words, you're going up and then suddenly there's this weird price point where activity suddenly goes crazy in terms of it taking much longer to get a home sold. And then below that band and above that band, you get much more normal activity. It doesn't happen frequently. It's not something you see in every market, but particularly when things are weird, like when we had the downturn in 2008, in 9 and 10 and 11, you could spot areas where you could spot markets where that was happening. Usually, if you drilled down far enough, you would discover that it was price banding related more to geography, more to the location of the property than anything else once you really drilled down. But it was an interesting thing to spot and can also help you find challenged neighborhoods that you could find an opportunity in. Anyway, so I thought I'd bring that out. All right. So the key problem here remains inventory. However, given the nature of what we're seeing, I also think this potentially reveals, and because here, the other reality here that's a ground truth reality for us is I'm not seeing as many multiple offers on properties. It's just not happening. They're far less. Even with the property that I sold a few months ago, I did not get as many offers, and I attributed it primarily to what the home had to offer. As I said, it had some challenges, but there was nothing else in the neighborhood. Right? There was one other listing in that general area, and it was quite a bit more than what my home was listed for. But anyway, it's one of those situations where, when you take this reality and mix it with lower numbers of multiple offers, it makes you think we might be nuzzling up, at least in my market, and this may be more broadly true across California, we're nudging up against the actual demand point. In other words, in short order, we may find ourselves in a position where demand and supply actually start to match, and you start to see homes not selling for over list price, right? So that's interesting to note. It's also interesting to note that as we are heading into August, which nationally August tends to be the month where you get the most money. Again, remember, I'm talking about a national average. Do not assume that in your marketplace, August is the right month to sell your home, because in other places, it's not true everywhere. For instance, in my local marketplace, late May, early June is the smart time to list your home. You tend to get the highest amount in the month of June. Just the way it statistically works. Other communities, it's different. So make sure you're figuring that out for yourself. If you're either just trying to sell your home organically as a seller and you want to move, or if you're an investor and you're trying to do a fix and flip, to time it to the best advantage as possible. All right, folks, we're going to take a quick break, but when we come back, we're going to talk more about these interesting headlines that aren't really giving us, I think, the full story in terms of information we need as investors. But when we come back, we'll talk a little bit more about that, so don't go away. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We're trying to sift through some of the big headlines that are coming out and form a more reality-based conclusion on what's going on with the markets. We've already talked a little bit about some of the talk about dramatic drops in sales, but also increases in prices. And that's true if you take the general picture. There's an article, though, that came out from Zero Hedge that I thought was interesting. Their headline paints a very different picture. Their headline is "New home sales tumble to 8-month lows despite price plunge." So let's get a handle on what they're talking about. New home sales and a lot of what they have to, and this is one reason this is something I was alluding to in the beginning of the show. New home sales spiked 6.7% month over month, and you never want to look at month over month. You want to look at year over year. But the month to month can be interesting in terms of if you want to look back at least 4 months to get a trend. But if you want to actually measure good things or measure in an intelligent way, you want to go back a year, right? Because you don't want seasonal stuff screwing with you. And if you do look at stuff going back 3 months, you want to look at that same 3 months the year before to see what the trend was then. Is that a trend that happens that time of year every year? Are people trying to get you hyped up simply because of a trend that always happens? And if you are someone who's into this stuff, you should know what the seasonal trends are for your market. So that's one of the things you want to suss out anyway. And the great news is you don't have to live through your market multiple years to figure it out. Get hooked up with your local real estate person, get some data, and you can figure it out for yourself. Okay, anyway. So new home sales spiked 6.7% month over month. Don't let that number fool you. In May, a big positive surprise in most since November of 2017. But June was expected to see a reversion with a 3.1 month-over-month drop, but it was far worse. Not only did June's 6.7% surge get revised lower, this is what's interesting, right? This is the part of the data that I find interesting. It got revised lower to 3.9 It got cut by 3%, almost 50% of the growth they said we got, which is interesting. Whenever you have to do a giant revision like that, it annoys me. But June tumbled 5.3% month over month, which was well below expectations. Now that's the biggest, and when you're talking about record-setting numbers, it's sometimes okay to consider those month-to-month numbers. This is the biggest month-over-month drop in new home sales since December of 2017. So this is one reason this data, I think, fuels this idea that the new home construction folks have overplayed their hand. They have catered to the higher end too much, and the market is responding to that. Whether it's because there simply aren't enough people who want to buy at that price point, or there are people who can buy at that price point but simply will not buy at that price point, or whether this might represent a general softening nationally that may not be reflected in micro markets. Maybe there are some markets in the country where people have said, I'm done. I'm stepping away. Now, remember, we saw this happen in San Francisco 2 years ago. For those of you who've been listening for a while, remember we talked about the mushroom effect. I don't know. Maybe I should stop making these terms up because you're going to go Google this and you might end up with some pretty creepy pictures. I call it the mushroom effect because it's casting the shadow on other communities, but it's a good shadow, right? San Francisco was one of the first places I think we talked about this where prices reached a certain point and then they petered out. And what we saw was the surrounding areas within easy commute of San Francisco benefited from a boost. So San Francisco slowed, communities around it rose. That's what I was referring to as a mushroom effect. People are tired of the bull and the darkness in San Francisco, and so they're going someplace where they can get into some sunshine and not be spending so much on their housing. All right. Worse still, the median price tumbled to $302,100, a big drop from $309,700, and the lowest since February 2017, still not encouraging buyers to step up. Now remember, these numbers all are new home prices, right? And remember, the average price that we talked about a minute ago for a home, whether new or not new in the US, is significantly lower than $302,000. If we look at the national average, now this is from Adam Data Solutions, is about $255,000 for the same time period for the second quarter, up 6.3% from a year ago. So we're talking about approximately a $50,000 difference between a new home and an existing home. Although it's probably even greater than that, right? Because this data from ATTOM is all homes, right? Probably including new homes. This is including, and we might be able to, I believe they also include condos in that $255,000 number. But the bottom line is there is a big difference between buying an existing home and buying a new home. And it used to not be that way. The what would you call it? The VIG, the bonus, the penalty that you pay for buying a new home used to be under 10%, right? When we've talked about this before, it was 6 to 10%, depending on where you are in the country. Now it's closer to 20%. So it's ridiculous. And one reason for that, we've talked about that before, is the regulations in place and the additional costs that go into building a home. And they simply migrate towards more luxury-oriented homes because then they're able to put a higher profit level on it and reap a little bit more reward for the investment. Okay. Other sexy numbers. The market remains notably bifurcated. 18% of new homes sold in June cost more than $500,000, up from 17% the prior month. Demand weakened in 3 of 4 U.S. regions, including a 7.7% drop in the South, the largest area. The decline in sales left 301,000 homes available nationwide in June, the most since March of 2009. So think what was going on in 2009, folks, particularly March. People were bleeding out of their eyes from the downturn in March of 2009. And that's what it's on par with in terms of the available homes for sale. So what does this spell for us? Well, in terms of being an investor, it means there are areas of the country where unbelievable deals can absolutely be had. And judging by this, we would have to conclude the South sounds like a good place to go. But I'm willing to bet you're going to find similar deals in other parts of the country. And the fact that we're seeing this in one of our regions is continuing to feed that beast we've been talking about, that we are at a pivot point. We've been sort of slouching into it now for a while. And it also feeds the idea that you're going to be able to see this coming. This isn't something that's going to, there will be signs, right? There will be portents that will clue us in that this stuff is happening. And I think this could be yet another item that is going to serve that purpose for us. All right. So finally, one more tidbit I want to throw on the top of this, and this is a subject that I think is going to come up more and more. I get more people asking me about this. I get more people curious about elements that I'm seeing. This is definitely the hit item for folks to ponder. But this last headline I wanted to cover for us is from RealtyBizNews.com. It's from July 25th. The headline is Impending Baby Boomer Sell-Off Could Cause Housing Crash. I think that's super interesting because I still do the listing stuff, right? I'm an active lister guy, and I am not getting. I mean, my last the one I talked about, the last one we discussed, which was the one from a couple of months ago. Those, I guess you could call those folks baby boomers. They're definitely in that batch, but I'm seeing less of that. The folks who I talk to about wanting to list their home aren't those folks. So remember, baby boomers were born from what, 1945 to 1964, and actually, so the folks that I just helped sell wouldn't be considered baby boomers. Those folks were a little younger than me, so they'd actually be the next generation, whatever was after baby boomers. Was that generation? Who is that? Anyway, not them, right? So they wouldn't be the baby boomers. And I haven't talked to baby boomers because everyone I've talked to has been younger than me, and I'm right about at the borderline of when the baby boomer stuff ended. But they're anticipating this big move. The article says the concern stems from the fact that baby boomers, or those who were born between 1946 and 1964, own a significant portion of American homes, around 2 in 5 of the total residential properties in the country. Other generations own just 14 million homes between them. As their twilight years approach, health and other issues will force baby boomers to move. Fannie Mae's researchers say up to 11.9 million older owners will move out of home ownership between 2016 and 2026. And remember, we talked about these numbers last week, I think, or the week before, where we talked about the number of folks per day that were likely going to come into this zone where they want to sell these things. So why do I bring that up again? Given the mix of everything else, given how potentially close we are to having the demand and the supply be to each other, right? Based on the observation that I am seeing far fewer multiple offers, and it tends to be slouching that way. What if this really does happen? Now, this isn't going to happen all at once. Not all the baby boomers aren't going to suddenly realize it's time for me to sell my house. I think that this will happen. I think next year is based on the data we covered last time, right? We came to the conclusion that 2019 was the year this was likely to happen. So, if we are that close, and as we can say, what did they say here? Was it 2/5? 2 in 5 of the total residential properties in the country are held by baby boomers. If those folks, if even a relatively small portion of those folks suddenly put their homes on the market to move, that could be a very big deal. And it could absolutely push us from that curve being demand being or supply not quite reaching demand. We could suddenly have a supply that exceeds demand. And there's a few things that would happen immediately. Number one, you would see new home prices or new home sales really take it in the pants. And as an investor, you want to sit back and wait, because this is what happened last time when we had a glut of existing homes come on the market after the downturn. Brand new homes were sitting on the market forever. And there was one development right here in Morgan Hill where about a year and a half into the downturn, you could get an amazing deal on a brand new home that had never been lived in. Nobody was in it. We even had some builders who were so unable to sell these homes that they had built to sell, ended up renting some of them. So that kind of a scenario could come into play where new home builders are in deep poop because they need to get those homes liquidated. They need to get back the money that they've invested through sales. So that could spell a very interesting opportunity. Now, it could also spell a situation for sellers where we are approaching the sweet spot of when you want to get your home sold. I this weekend will be taking photos of my home for use in marketing, because I am at the point where that's got to happen. So, taking my own advice, I'm not suggesting that I'm going to throw these ideas out there and then not make life choices of my own based on them. So I think that's interesting stuff to throw around. I'd love for you to bounce around in your noggin. Do you have a different take on it? Do you live in a market where what I'm saying is where you're maybe even a little further along the curve than I am here in Silicon Valley, and you're seeing this happening and you are taking steps to live through that reality? Let me know. I'd love to hear your real world experiences. All right, folks. As always, I truly appreciate you listening to what I have to say on these subjects. I hope I have left more value on the table than I've used up in your time. Frankly, it always needs to be a higher value proposition, and I hope we've done that for you. Thanks again for listening, everyone. I'll talk to y'all next time.